Hey, it's Mike Lynch with AmeriFirst Financial. Happy Monday. It is time for your morning Monday update for the week of June the 27th, the last week in June. 4th of July is right around the corner. I know a lot of people are going to be getting out of Dodge on Friday, taking advantage of that long 3-day weekend. So let's talk about what's going to happen in the market. First, boy, it's hot. Summer is quickly upon us. I can't wait to take a little break on the 4th of July weekend. So what am I going to talk about this week? Really, equity in homes, our foreclosures coming, and then credit and savings. So equity, CoreLogic came out with a report that said equity is way up in the first quarter of 2022. It's showing a gain in homeowner equity, means more people have equity in their homes. It's an increase of 32% in the first quarter of this year. That equals nationwide to $62,000 average equity that people have in their homes. The report also showed is that there's an increase in negative equity by 23%, meaning fewer people are upside down on their mortgage, which means that they owe more than their house is worth. And this is a really important number. It equates out to about 300,000 fewer homes are upside down. And this is great news. We're starting to hear talk about foreclosures and affordability in homes, and people can't afford their payments because inflation. And is there going to be another run on foreclosures like we saw back in the last housing crisis with 2008, 9, and 10? And I'll talk about in a sec. But really what we know is homeowners protect their equity, and they have to. They can't leverage their equity more than the guidelines allow. And the guidelines are so restrictive on how much equity people can put out of their homes that really the guidelines have allowed people to develop this equity in their homes. And this is just really good news to combat those fears that a foreclosures storm is coming. Second thing is, are foreclosures coming? We all have a little bit of PTSD from the last housing crisis, let's be honest. And that foreclosure run that we saw in 8, 9, and 10 was pretty bad. And when we see these values go up like they have, and we see affordability become an issue and people are struggling to pay their bills because of inflation, we all just default to history and say, well, people aren't going to be able to pay those mortgages, and those foreclosures are coming. Well, we have to remember that what happened last time may not happen this time. And the facts really say that there isn't going to be a foreclosure crisis. Consider that the increased equity in the homeowners and the decrease in the upside down nature of people's property, that all equates to about 1 million homeowners are upside down on their property. 1 million. Now that's a lot of people. But think about the housing crisis. In 2008, at the start of it, there was 10 million people that were upside down on their mortgage, 10 times more than we see now. So even though we don't like to see anybody upside down on their mortgage, the numbers are significantly less percentage-wise than they were back in 2008, 9, and 10. Everybody has a 30-year fixed mortgage. They don't have those adjustable rates or those neg-ams or those fixed adjustables. So the average homeowner is in a much better place to weather a storm. Credit and savings. Interesting stat that came out that household credit is up 8%. People are charging more on their credit cards. It's the biggest increase we've seen since 2007. And savings rates are down. It's at a 5-year low. So inflation is hitting the pocketbook. We know that. We know what it's done to mortgage rates. The question is this increase because people don't want to change their lifestyle and they are charging to maintain going out to dinner and the stuff they want? Or are they charging more of their bills on credit because they don't have the cash or the income to pay their bills as those bills increase because of inflation too? So we should see some reports coming out that give us some perspective on that. What are we doing this week? We're generally locking. Really don't expect the rates to improve. There's more risk to rates getting higher than lower. So I'm not playing with my clients' money locking. If you have anybody that needs insight on whether they should lock or float, let me know. If you know anybody that could benefit from this video, please forward it to them. I'd love to hear your comments. Have a great, productive week and a wonderful 4th of July weekend. And I'll see you on Tuesday on the 5th after the 4th of July weekend. Talk to you soon. Bye-bye.